In a twist that has left market analysts predicted for some time now, but never thought would come along instantly, Supermicrocomputer stock has dipped more than 4% today, despite groundbreaking technology and innovation by working with market behemoth Nvidia. The company recently unveiled a new addition to its supercluster artificial intelligence infrastructure for the Nvidia Omniverse platform. The update introduces Supermicro's Nvidia OVX system, enhanced with generative AI workflows, promising a surge in workload scalability. But why hasn't this announcement shifted the needle upwards for Supermicro's stock in the weeks after? It is because of legal troubles that Supermicrocomputer has been facing lately, but this poses the question, if the stock keeps going down and the AI revolution keeps going ahead anyway, is it time to buy Supermicrocomputer stocks to gold for the inevitable bright future? This perplexing scenario features some of the biggest names in the tech industry, Nvidia, AMD, and Microsoft, making it a blockbuster news item that warrants a closer look and offers a possibility for any investor to make it big. Welcome back to Investocracy.
You know, people like made in USA, especially made in Silicon Valley, because this way they can come to see our facility, can come to see our product, and monitoring all the process. Kind of test the system during our design and building the product before we ship. So when we ship the product to customer are pretty much 100% happy. So that's the advantage of Silicon Valley. And most of our customers are kind of really picky customer. They want the best product, not just a car can run fast, but fastest and most safe and consume minimal gasoline.
That's where you're different from sports cars, because sports cars consume a lot of gas.
Supermicrocomputer has captured the market's limelight, but it is sure as hell not the kind of limelight any thriving and innovative company would be looking forward to having, especially when it is in the midst of an AI revolution that promises to be more expansive and than any analyst or expert can possibly predict. Hindenburg Research is the firm that put Supermicrocomputer in its sights and has it on the back foot defending itself while its stock takes a nosedive. But is this a bad omen for investors or an opportunity waiting to be snatched at the right time? Supermicrocomputer's legal troubles seem to be taking a while, and the stock is not going to wait for good proceedings or results. It is slipping right now, and it is not looking to change anytime soon. But as the problems are overgrowing for Supermicrocomputer, the AI revolution headed by Nvidia is not waiting for anyone. Not to mention the work that Supermicrocomputer is doing with Nvidia is possibly not going to stop in its tracks, and any association with Nvidia at this point is going to skyrocket anytime sooner than later. I mean, we already know how big Nvidia is going to get further into the future. But what exciting future are we exactly talking about here? What is Supermicrocomputer's association with Nvidia that makes it important to capitalize on during its lowest moments? Before we go any further, however, if you want to keep up with Nvidia's latest updates and everything associated with it like Supermicrocomputer, while also keeping up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to the video.
You know, from design, validation, and integration, and we ship the complete system or complete rack. We make the rack plug and play, ready to run right away. Lots of our customers receive the rack, they just do the two things: plug in the power cable, plug in the data cable, and ready to run. Because we install optimally all the hardware, firmware, management tool, so it kind of makes customer's job much easier.
Tell me about your relationship with NVIDIA CEO Jensen Huang. You guys go way back. You've been known people in the chip industry for a long time. What was the evolution of the use of GPUs in the performance systems that you built?
You know, sometimes it's by chance. Both NVIDIA and Supermicro founded in 1993. So almost from day one, we know each other. And then we grow together. So Jensen just shared the reality when he introduced the first AI machine. Indeed, Supermicro was the first company make his chip ready for the market.
Super Microcomputer, a titan in the world of GPU-optimized products, has made headlines with its latest innovation, the enhanced supercluster for Nvidia's Omniverse platform. Charles Liang, president and CEO of Supermicro, couldn't contain his excitement. With the rise of AI, enterprises are seeking computing infrastructure that combines all these capabilities into a single package. The system helps deliver high performance across the Omniverse platform, including generative AI integrations, he said. Let's pause here for a bit of stock market humor. Why did the investor buy an Nvidia oven? Because it promised great returns on bake-ups. So, what's in this magical supercluster? Essentially, it's the holy grail for professionals relying on processing-intensive 3D workflows. From artists to engineers, the infrastructure solution covers it all, featuring 400 GB support and Nvidia's Spectrum X Ethernet for that extra punch. Despite the gloom today, SMCI stock is enjoying a stellar year, up 135% in 2024 thanks to the irresistible AI craze. Yet, in recent weeks, both Supermicro and Nvidia have experienced a minor sell-off, making investors skittish. The volatility is largely due to concerns that other tech giants might dip their toes in the chip-making game. So what does all of this mean for Nvidia investors? What does it mean for investors looking to capitalize on Supermicrocomputer's flailing stock right now? The answer is easy. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's time for FOMO, so joining us now to discuss is Caroline Wood, senior markets correspondent for the network, and we're talking, honestly, one of the craziest charts, although it's not looking as crazy because we've pulled back about substantially now from its 52-week highs. But Caroline, walk us through Supermicro. I mean, this is, in and of itself, one of the most FOMO-type feelings when you look at this chart and its run this year.
Yeah, especially if you zoom out and look at the one-year chart, up 662%, up 164% year to date. It is still down about 25% this month, but regaining some of those losses today, up about 5% right now. We thought the AI trade might have run out of steam last week when we saw Supermicro plummet. We saw Nvidia plunge, 10% on Friday, but definitely picking up some steam. Now, we know the U.S. cracked down on exporting high-end AI chips from the likes of Nvidia to China, but it looks also like China may have found a workaround. There's this Reuters report that Supermicro is involved, that China bought Nvidia AI chips through resellers. They were reportedly embedded in server products made by Supermicro and also by Dell. Those servers contain some of Nvidia's high-end AI chips.
Even though Supermicro and Nvidia stocks recently surged after AMD, and Microsoft reported strong earnings growth, citing robust data center revenue, the AI sector has seen a more significant pullback. AI stocks had a rough Monday, impacting Nvidia and Supermicro, primarily triggered by U.S. recession fears, sparked global sell-offs, and concerns over AI investment returns. The disappointing July jobs report isn't helping, and market strategist Jay Woods of Freedom Capital Markets summarized the sentiment best. We've gotten a pause, and now we've gotten a little fear thrown in because of external factors. What we're seeing is a correction. Case in point, Nvidia and Supermicro dropped 6% and 2% respectively earlier this week. Supermicrocomputer also took a hit after Hindenburg Research disclosed a short position. It seems like a perfect storm of factors has contributed to the recent downfall. But let's not forget that even amidst all this turmoil, AI stocks, including SMCI, have made remarkable gains in 2024. Adding to the intrigue is Nvidia's recent delay in rolling out its latest AI chip by 3 months. This postponement has potential ripple effects on mega-cap customers like Meta Platforms and Microsoft, stirring the pot further. Meanwhile, shares of advanced micro devices got a momentary boost amid the tumultuous trading. And just when you thought it couldn't get more nerve-wracking, Berkshire Hathaway revealed it dumped nearly half of its stake in Apple, triggering a broad tech sell-off that saw major companies like Meta, Alphabet, and Tesla taking a nosedive. Even Supermicrocomputer, with its doubling shares in 2024, wasn't spared. Let's pivot back to the present.
$1 trillion of CapEx is what we see from an AI perspective over the next 3 years. You go back 6 months ago, we thought that was $500 billion. And so every quarter, if you look at the underlying demand, not just from hyperscalers, but eventually it's going to be other enterprises, it's just starting. So all of our checks are showing demand's actually continuing to accelerate. You know, as Farrell talked about, yields are improving from a production perspective, that they're the only game in town. Use cases are coming through. We saw that with Palantir. You see that with ServiceNow. Now this fourth industrial revolution, Rome wasn't built in a day, neither will AI revolution. It's starting to come together. Anyone that thinks this is hype, you listen to conference calls, Nvidia, AMD, Microsoft, Palantir, and others. I mean, I don't know what watch party those bears are, but they're not listening to the calls that I am.
The artificial intelligence boom isn't going anywhere, but it's clear that investors want to see real, tangible returns before diving back in. Even experts like UBS strategist Maxwell Grinikoff warn that hefty investments in AI may take longer than expected to pay off. The broader market sentiment suggests a mix of skepticism and cautious optimism. Earnings have been less than stellar this year, and short sellers like Hindenburg Research have only added fuel to the fire. But while today's market shows a minor dip, it's essential to note that both Supermicro and Nvidia remain heavily favored by investors for their trailblazing advancements in the AI landscape. Here's the takeaway. Despite today's dip in Supermicro Computer stock price, the company is well positioned for long-term growth. The AI revolution is still very much in its infancy, and companies like Supermicro and Nvidia are at the forefront. While the current market conditions illustrate a sector-wide correction, long-term investors might see this as a buying opportunity. Given their impressive gains this year, when the dust settles, SMCI is poised to climb back up. As it stands, the stock is a tantalizing option for anyone willing to weather short-term volatility for potentially lucrative long-term rewards. Are you ready to ride the AI wave? What are your thoughts on Supermicro Computer's recent developments and their impact on the stock market? Share your views with us. Let's keep the conversation engaging and informed. And finally, if you would like to know what companies like Nvidia and Supermicro Computer have been up to these past few days, go ahead and click on the next video on your screen. See you there!